Hi guys, what's up? All right, we've had a whole lot. I've taught you how to spot out a trend. I've taught you how to get good entries. I've taught you how to understand the differences between all the three types of trends. And we've also had some psychology lessons. I've taught you risk management. So on this video, I want us to dive deeper into key levels, how you can start your trading just with key levels. All right, understanding key levels, adding it not just as a confluence but using it as a complete strategy when you master the trend direction. So let's say we are in an uptrend. All right, it means on your key levels you are looking only for buys, while or you use your key levels to get buy entries. All right, so this is exactly what I'm going to be telling you on this video. And I think, yes, if there is any question, yes, I know this video is strictly for my academy, though I would drop part of it on YouTube. But the main target or the main goal is to let my students understand deeper how the key level strategy can be used on its own, not just as a confluence, but as a complete strategy. All right. So let's go deep into the video. See you in class, homie. All right, guys. Welcome to the chat. All right. I forgot about the tone. I just got excited. I got a little excited. All right. And today we are going to be touching key levels deeper. All right. This video is going to be long, crazy long. Just take it the way it is. All right. Like I said in the intro, we're going to be going deeper on key levels. So what are key levels? The first thing you need to understand is key levels are psychological levels where price always reacts. All right. So from my experience, I noticed that around round figures like 1.300 to 1.3100, that's 100 pips, right? So 1.300 is a psychological level or a key level. 1.3100 is a psychological level or key level. As we speak, let me be touching those levels I'm talking about. All right. So 1.300 is a psychological level. 1.3200 is a psychological level. 1.3600 is a psychological level. 1.3800 is a psychological level. Now, between 1.300, this one, and 1.31, because there's 1.31 before 1.32. Let me show you what I'm talking about. Good. So you see, this is 100 pips. Let me draw it out so you know what we are talking about, okay? So we say 1.300. Good. And we just gotta adjust it. Normally, settings. Okay. So between 1.300 and 1.3100 is 100 pips. Okay. 100 pips. So this distance between 1.300 and 1.3100 is 100 pips. So to verify, you can just, there are so many tools you can use to verify. Let me see. But let's just use this buy sell tool. Okay. So you take from here to here. You see, it's showing us 102 because I'm not accurate with the timing. Okay. So we have 100 pips here, and that's how it goes. All right. So between two key levels, we have what we call the mid level. So a mid level is 50 pips, all right? So you can as well mark out a mid level here. So if you look at between these two key levels, there's a mid level where you have 1.3 500. Good. That's a mid level. Okay. So when you mark it out, you know that all right, between the two key levels, there's a mid level, and that mid level gives you 50 pips. All right. Okay. Let's just focus on key levels for the meantime, and let's mark out key levels around where price has been working for the last couple of days. Okay. So I'll pause the video so that it shouldn't be too long. I'll mark out the key levels, then I come back and we continue. All right, guys. All right, guys. So we got our key levels marked out. Okay. Those who've been attending classes, we have spoken about this earlier, so it's just revision. I want it to be well understood. That's why I came back to this. Okay. So I want us to take a closer look. We are on the daily time frame. Let's go down to the 4 hours and do a little compression. Okay. I want you to take a closer look at what happens. All right. I want you to take a closer look on what happens on those key levels because it's very, very essential. The network today is slow, so it's taking time. So I want us to take a closer look at what happens on the 4 hours. Okay. And be very, very vigilant because this is what this strategy is all about. Okay. This is what the strategy is all about. Look at all the key levels we marked out. Okay. Look at all the key levels we marked out and see how price reacts on them. Okay. See here. Where is my pen? Oh my God. I just spoiled the shit. All right, guys. I just spoiled my pen. So just a chapter. Okay. So let me use another tool. So look at what happens here. You have a touch, you have a touch, you have a touch, you have a touch, touch, reaction. Okay? Whenever price gets to a key level, it reacts. You get there's always a reaction around a key level. You get so that's the power of these key levels. If you look closely, you see that whenever price gets to a key level, there is price, always a reaction. Okay, there's always a reaction. And now that you understand that there will be a reaction, what do? You try to, the first thing you need to understand is the trend direction. Once you get the trend direction, you start looking for how to take advantage of that trend direction. Okay, how to take advantage of the trend direction. All right, so now we have understood that price reacts on those zones, right? Now we have to find out how to buy or sell from those zones and how many and how do you actually take advantage of it. You go down to the 1 hour time frame. Okay. We go down to the 1 hour because I think on the 1 hour you get very good confirmations. All right. So guys, simple. Let's look at it closely. You see, like now, we're in a downtrend, right? And this is our major change of character here. Price took out structure somewhere here. Okay. So once this happened, what are we supposed to do? we need to start looking for a pullback normally, like on a normal trade. Okay, now what do you see? Price comes back all the way to your key level. Okay, to your key level. What do? You get it when you start seeing rejections. Okay, you see rejections around the key level. How many pips do you put? You take a 20 pip stop loss. Okay, and where do you target? Next. Oh, yeah. So you target the next key level or the next mid level. If you target the next mid level, which is um, one, which is between the two key levels, all right, it's 50 pips, and you are risking 20 pips. So that gives you approximately 1 is to 2.5, okay? But if you want to take 1 is to 5, then you target the next key level, all right? So somewhere around the next key level, you target it. Now, what happened? Price continued going up, okay? And price break through our key level with so much momentum, okay? You see, we had a little pullback here. I just want us to follow all these things. All right. So after this big move, we had a little pullback. Okay. A little pullback. Now, what happened? Price wicked out of this zone, close below, telling us we might start selling. Normally, if we're in a downtrend, we would have been looking for sales. But now, since we are in an uptrend, what are we waiting for? We're waiting now for any candle that will close above this key level, because after this pullback, we've actually swept the little liquidity that was left below these candlesticks, because when we closed here, some people entered with 20 pip stop losses, and this pullback was targeting their stop losses. So it has taken it out. What are we looking for? Any candle to close above our key level, all right? Any candlestick to close above our key level will enter from that candlestick and risk 20 pips, okay? So this is our second trade. This candlestick closed above and the new one opened. So we enter, how many pips? 20 pips, okay? Simple, as usual, the same, 20 pips. And if you notice, even if you entered here, you will still not be stopped out, okay? After this candlestick closed above, you will not be stopped out if you risk just your 20 pips. But I prefer to always have something like this. Now, what do? You target the next key level, or you target a mid level, okay? It's all on you. So this is our second setup. You can target the mid level, which will give you 1 is to 1.5, 1 is to 2.5, or you target 1 is to 5, which is the next key level. Okay. Now, you've targeted the next key level. You saw this candlestick close with so much momentum above this key level. We are in an uptrend. So if price decides to break through through a key level in an uptrend, it's very okay. It's very okay. What you want is the next candlestick that opens after that candlestick not to close below. Once it doesn't close below, what do? We buy. So this is our third setup. Okay, buy from here since it did not close below. How many pips? The usual 20 pips. Okay, the usual 20 pips. What are we targeting? The next key level. Okay, that's to make trading very easy for you. The next key level. It's an uptrend. And what happened? You gave here 1 is to 5. Clean. Now, what happened? Price break above. But now the next candlestick that opened actually closed below. You get the next candlestick that opened actually closed below. So here. So we are not supposed to trade. We wait for this one came, did not break through, and we did not have a change of character to tell us maybe the trend has changed. So we keep waiting. This one came up with so much momentum but did not close above. Finally, this one opened and closed above. Okay, so as this one closed above, what do? We look for our entry. Okay, we buy from here. Okay, our key level still, how many pips? 20 pips. Okay, we target our simple 20 pips, and we target our next swing, our next key level, 100 pips. So we've actually taken 4 trades because we had 1 trade here. So we've actually taken 4 trades back to back, and we've not hit a single loss. Okay, we've not hit a single loss. 1:5, 1:5, 1:5, 1:5. Okay, we've had over 4 1:5s. Okay, now how do you know if you should close on a mid level or a key level? It all depends on the way price behaves. Okay, like this one, normally the first setup we're supposed to close at a key level, at the mid level here, somewhere around here, mid level. Okay, now price came back and still gave us wicks around here, which means we would have even taken 5 trades, because when we started seeing these wicks, price unable to close, go down to a lower time frame, you will get a good confirmation. You buy, targeting your next key level, risk your 20 pips stop loss. Always take 20 pips. You must not be right all the time. So if you want to be wrong as fast as possible. Free yourself from the bondage. Okay? You see how simple this has been going? Take your time, watch this video, understand it, understand exactly what we are looking for. Now, what happened? Did we have any change of character here? Not yet. So we would have still been looking for buys around here. So when price break through, okay, the momentum was too much. It closed all the way up. We could not just buy from here, and it's a mid-level. We cannot also sell from there. What do we have to do? We just be patient. You see, price came back, bounced, and closed above. What do? You buy, because how would you know price wants to go down? You will not know. So you buy from here. So this is the tricky part. You reach your 20 pips. Okay. Now, you target your mid-level. Did it go? No, it did not work. Price actually stopped you out. And that's part of the game. At this point, you start being very smart, because look at it. How many times? 1, 2, 3, 4, 5. 5 times price did not stop you out once. Now price has stopped you out. It is telling you something. Something is about to change. Now, what happened? We finally got a change of character. Okay? Because price finally came back and took out this low that it created. Because this is the most recent low. And price took out the low. Once you notice this, what do? You start looking for sell opportunities. And there is one thing about key levels. Key levels are not just those numbers, okay? They are zones. Key levels are zones. I want you guys to take time to understand this video, because we might not have enough time to continue doing videos like this, but it's good you do it, you understand. So this is a complimentary video. So you can always mark out small boxes. Those who've been attending my classes already know. So the stubborn students who have not been attending classes, or the busy students, let me not just call you stubborn, maybe you're busy. The busy students who have not been attending classes, this is an opportunity for you to master what you have to understand. So you mark out zones, all right? You know that, all right, this zone is a key zone, all right? So you don't just say, okay, this line, because at times price will not get there, okay? Now, what start happening? We start seeing downtrend, okay? Yeah, guys, all right, so we've actually come to this end. It's not the actual end of the video, so if you want to watch the complete video, I think you can hit me up through the comment section, or maybe anywhere in the description, to get access to the Fellow F Academy, where you will see the rest. All right, it's a simple strategy, and if you understand everything about it, you'll be able to stay consistent. All right, so I'm making this YouTube channel in a way that you can use just the videos I post here to gain profitability. All right, so this is a class for you, it's a school for you. All right, so if you're not subscribed to the channel, I think it's best time for you to subscribe, because we're going to be giving a lot of these things. All right, so many people want to also know about candle range theory. Yes, that's a strategy. I can also guide you on how to use it. All right, I gave a video on it. It was just so shallow, and I'm going to give a deeper video on it on this channel. All right, and if you want to complete this video, head straight to my academy. See you on the next video, guys.